Hi, Jack.
Marcy, we want to make a video on foreclosure bailouts. I don't know how to say it
Absolutely.
nicely.
Because they're very active now.
Very active. Can I
Very.
just say something before I forget? Because I always forget. So first of all, and I apologize, like the YouTube or video, if you have questions, subscribe to our channel. If you have questions, ask them, we answer them. This is a serious issue we're going to talk about.
Yeah, it's an unfortunate issue, but it happens.
Yes. For those who don't know us, we're non-bank private lenders. We're doing deals that banks don't want to do or can't do fast. So we can approve a deal. Literally, Marcy's the decision maker. So
And Jack.
it's usually the women. It's usually the women. If the men sometimes
Oh,
prepare.
boy.
But either way, we can make a decision quick.
Yeah.
Literally on the phone within an hour. We'll issue a term sheet. We'll close the deal, and we're collateral-based lenders. So we're talking about foreclosure bailouts on this video, but we do all kinds of asset-based lending. We're not as focused on the income of the individual or the credit of the individual.
We're going to look at the property. We want to know how much income the property is going to make to pay the loan payment.
That's correct, or
So-
can make. So that's the premise of the call. People are coming to us to do deals, and we're incredibly creative, especially with foreclosure bailouts. Because sometimes, and Marcy's going to talk about it a little bit, the loan to values aren't there. So we have to get creative with that. So let's talk about,
So, well,
give
I
everyone
guess-
the premise of foreclosure bailouts. And I have a lot to say on this because
Yeah.
this is
Before I even talk about foreclosure bailout, let's talk about the individual that's going into foreclosure. So if you see that you're in this situation, don't let it get into a point of foreclosure. Be proactive. That's like the best time to reach out to us to bail you out is before you really are in foreclosure. I mean, you know your cash flow, you know what's going on, and you need to figure it out. Like if your loan is ballooning or you're behind, and most of the foreclosure bailouts that we do see are loans that have ballooned and the other lender put them in default because they want to be paid off. But be proactive. That's the most important thing. If you see your situation, you know, that's when I want to tell my borrowers to reach out to me before it's drastic, before there's a sale date, and you know, we can help you. So I just wanted to say that first. But now let's talk about what happened.
Can I,
You
Sean?
can, sure.
I think it's important to reinforce exactly what you said, because we see it time and time
But
again.
it's too late.
Borrowers are calling us when it's too late.
Yeah.
Or it's so hard if they would have started the process 3 months earlier. And what happens in our case is they'll call us, we'll approve the deal. Maybe the deal is just in the beginning stages of the foreclosure. They ignore our term sheet. Then they call us
Like a week before the sale date.
and sometimes it's too late. We had
Yeah.
one last
It's
week.
too late.
We approved the deal
Yeah.
60, 90 days ago. It was in Wildwood, New Jersey.
And he just didn't come back. And I kept emailing him, hey, what's going on? Blah, blah, blah.
Nothing. And all of a sudden, the sheriff's sale was yesterday. We're making this on a Wednesday. The sheriff's sale was on Tuesday. Friday, he showed up. Oh, okay, I want to do it.
Yeah.
And we tried, but it was just too late. And the bank who was foreclosing, we came up with a suggestion of us buying the loan and modifying it. But the bank, he had already put the bank through the mill. The bank,
They were done with
they were
that.
done with them. They just
That's it.
didn't care.
No.
So I want to reinforce Marcy said, look, in life we all do the same thing.
Well, I'm going to say it's like burying your head in the sand.
Yeah.
I mean, we all do that with different things in life. If it has to do with like a relationship, you know, anything, your job or your financial situation, it doesn't go away. That's what I'm trying to say to everyone out there. It doesn't go away. So I'm just telling you to be proactive and say, hey, this is what's going to happen. Let me come up with a solution.
Really deal with bad things first. The
Yes.
good things can wait. You know,
Yeah.
it's like if you get mail and you know there's a collection letter, you put that aside, you open the two
It
good
doesn't
pieces
go
of
away.
mail. Deal, especially in the legal aspect, it's going to catch up with you.
Yeah.
Deal with the bad things first. So I think that's the most valuable thing we can say. In fact, we could end the video now and just go bowling or play
I
ping
just
pong or
wanted to
something.
say that, and I mean, to me,
Forget the rest of the video.
it's
No.
really about be realistic. Look at what's going on. Don't wear blinders. Don't just say, "Oh, I'll deal with it tomorrow." because it's your life, it's your property, it's your livelihood. And we're a solution to help you get through it.
And the reality is, when you have foreclosure, I know there's a lot of attorneys who do foreclosure defense, but here's the hardcore reality is, all they can do in 99.9% is stall it.
Yeah,
they can stall it. They're not going to solve the matter.
No.
Ultimately, if you don't do anything,
you're going to lose the property.
You're going to lose the property. Okay, so tell everyone what we do now. Now back to the meat of it.
So back to the situation. A borrower calls us.
I'll sit down.
A broker or borrower. We deal with, brokers bring us deals. Borrowers come to us directly. They come to us. They tell us the situation. We will then jump in and start moving. Oh no, it looks better out.
Okay.
Then we start working on the loan, and we are a solution, but to keep in mind, there does have to be equity in the deal for us. Even though it's a foreclosure bailouts, we do it has to be about 65% loan to value, and then we're going to take the valuation, figure it out, what's outstanding, and take it from there. Yes, Jack?
So you brought up something right before we started to make this, and I think you said something like, a couple of years ago when we were doing foreclosure bailouts, and we've been doing them forever.
That's like a staple here.
That there were equity in the properties.
Right.
But you basically said, and I forget how you said it, the ones we're seeing now.
The one I was just telling Jack, because I'm more on the front lines talking to all the brokers and the borrowers, and so what is happening out there is the borrower, and I'm going to have to say the borrower, they have unrealistic values of their property. Okay, so that's another problem that's been coming up a lot, that the lien that's on the property and then the value that the borrower thinks it is, they're not making sense. The lien is the lien, but the value is much higher, but it's not. So what we're finding is a lot of the foreclosures in the past used to have equity in them.
We're lower leverage.
Yeah.
Now they're higher leverage. And I think it's a combination of two things. One, obviously,
the market, huh?
Yeah, the market.
Yeah.
Interest rates have gone up.
Yeah.
And that's caused prices to come down.
Which is really hard for the public and the brokers and the borrowers to understand. They think that their properties are still worth what they were 2 years ago, and they're not. The rates have taken all the values down.
Yeah, and a lot of people, they refinance them when, a year or 2 or 3 years ago.
Yeah.
And if they were, let's say they owed $300,000 they borrowed, then they borrowed $500,000 and they thought they had plenty of equity.
Yeah,
so
and some of them are upside down.
A lot of them are upside down.
Yeah.
So we're generally at a 65 LTV on a foreclosure bailout, really about everything. And on a foreclosure bailout, we're really not, we want to solve the problem, but we're not really qualifying the borrower on their personal income. It's on the property income. We want the property to support itself. Or if the property's vacant, can you lease it out?
What's your plan?
What's your plan?
Yeah.
And have a plan. You need to have a plan. You can't just say, oh, I'm in foreclosure now, I'm going to take out a loan with you and I'm going to be fine. Like, why didn't you pay the other lender? And why are you going to pay us?
That's the situation. So again, I'm going to go back to even before we started 10 minutes ago. You have to foresee what's going on in your life. Okay, so if you see what's going on, you see that your property is vacant, you see that you're having a hard time leasing it, you're seeing that your loan's coming due, you need to come up with a solution before it's too late.
100%.
So
we can get creative with foreclosure bailouts and any deals.
And we're not scared of them. I mean, we do them all the time. They work if there's equity in the property.
Yeah, and I have to tell people this, that, sometimes people think that we do foreclosure bailouts and some tougher deals. So, they say, oh my God, you must have unbelievably high delinquencies. And
No.
but believe it or not, very seldom does a foreclosure bailout deal cause us a problem. They're usually very smooth. They really are. I don't know why, but
well, because it's like we're giving them a second chance.
And people
to
are
try.
grateful.
They're grateful, and they don't want to make the same mistake twice.
But we can get, if the 65 LTV doesn't work, how we can get more aggressive with it is to do it in other ways. We'll do it as a sale leaseback. We'll do it where we control what I call a JV equity deal. We call it equity partners, where we
Where
control,
we control a little
part
bit
of
the
the
LLC.
So there's ways that we can get above that 65 LTV.
And also sometimes, I mean, I know if you're in a foreclosure bailout, but if you own another piece of property that has equity, we can do what we call a blanket loan, which is we take both properties and put it on the loan, and we grab the equity out of the other property to make our loan work. So
I apologize for yawning. I'm not yawning at the topic. It's a serious topic. I'm just
we're
getting over
boring
COVID.
you.
And
Yeah,
to
he
be
had COVID, can you imagine?
yeah, first time. And to be honest with you, my son, one of my sons keeps telling me I have long COVID now because by 10 o'clock in the morning I'm falling asleep. So I apologize.
No, it's not funny, but he'll be okay.
Yeah, I'll be
Yeah,
fine.
you'll be okay.
I'll live. What we're saying, I was foggy brain.
Well, we're just
no, we can get creative.
Yeah.
We can get
Talk
creative.
about blanket loans.
Talk about blanket loans. Talk about sale leasebacks.
Right. And let's define sale leasebacks so you understand. What it is that we basically put the property in our LLC. You make rent payments to us, and as soon as you get out of our loan, the LLC transferred into your name, you own the property. So it's kind of a temporary fix for you, and you know, that's just another solution.
We just had one pay us off.
Yeah.
It was, I don't want to give too much information for confidentiality reasons, but it was a restaurant in somewhere in Central Florida.
Yeah.
And there were all kinds of problems, but whatever. It was in an LLC that we control.
Yeah.
She refinanced it, and she paid us off, and it was a beautiful
It's
deal.
really just like a loan. It's just that the difference is like
Well, the difference is we don't have to go through a foreclosure
Right.
and be dragged out in the court system if it does. But
so
it's
that like we would offer that if it's a very risky
so we can get
situation, it's
higher
high risk.
leverage
Yeah.
on that. The bottom line, we can be very flexible with it. You know, sometimes lenders will take short payments. We can buy. We've also purchased the debt instead of paid off the debt. We've purchased the debt and modified.
Yeah.
There was one case, I don't want to give the name, it was a gas station, it was a repeat borrower. We purchased the debt, we modified the debt, he ran it through a bankruptcy to blow out some other liens.
Right.
So we can get very, very creative on foreclosure bailouts. But again, you have to have a borrower who is willing to do something and doesn't have his head in the sand.
Right. That's the whole key here in life. You got to deal with the issues.
Yeah.
And you have to give yourself time to deal with the issues. You cannot call anyone to have it done in a week.
Well,
so
yeah, I think people get confused with that too, because the truth is we do say we can close in 7 to 10 days, and we do it all the time.
We can, but it depends on the situation.
Yeah, and usually on foreclosure bailouts, the very
they're
litigious,
a little bit
they
messy,
the titles are messy, so
Yeah.
they usually take longer.
Yeah.
So the bottom line is we can do foreclosure bailouts. You don't have to lose your property, and by all means, don't go to one of the. You can go to one of these foreclosure attorneys, but they're going to stall. And don't be surprised at the end of the day when you lose your property if you're not making payments. And look, I get it. Everyone always blames the lender, and they always blame someone else.
Well,
but it is what it is.
I mean, it's not a question of blaming the. Listen, we're all entitled to get the facts when it concerns your own issue. So don't be afraid as a borrower to ask your current lender, what's the story? What's going on? How much time do I have? You know, be as clear as possible, but ask the questions. That's what the problem is. You need to ask the questions.
Bottom line, if you're in foreclosure or you think you're going to be in foreclosure, or it doesn't have
Get
to be
all
a
the
payment
facts.
foreclosure. If you have a
It
balloon.
could just be a balloon.
A balloon.
Yeah.
We're working with a lady now. She made all her payments on time.
But the lender put her in default because they wanted it to be paid off.
She didn't refinance
Yeah.
in time.
Yeah.
She didn't refinance in time, and she lost the property. And we're doing it. We're buying it with her out of the redemption period. You know, so get on it. Don't keep your head in the sand. You know, don't be a putz. Excuse my expression. I don't mean no, because a lot of these people are.
Oh boy, no, don't just take care of your stuff.
I'm gonna have to call the whole video because I call that. No, a lot of
No, that's okay.
a lot of these
Not
people,
everyone's gonna even understand what that means.
a lot of these people are irresponsible.
Yeah.
Again, don't put your head in the sand.
And also be your own advocate.
Yes.
Because I'm just telling you how many times I've talked to borrowers that were like, oh, well, this person said this and this person. I'm like, no. I go, you need to get all your facts. You need to research what's going on, and you need to take care of yourself.
Get your head out of the sand.
Yes.
That's what I meant when I used that word. I shouldn't have used it. I apologize. I'm not redoing this video. It's easier to
It's a good
apologize.
video.
But don't get your head out of the sand and
Yeah.
face reality and get jumping on it. Be
And do
vigilant
something
about it.
about
Make
it.
it your primary.
Yep.
Okay, check us out at
Have a
geltfinancial.com.
good
Call us at 561-221-0900. And the most important thing, have a great day.
Have a good
Thank
day.
you.
Bye.
Okay.